Thanks, Paul, and thanks everyone for fighting traffic to be here this morning. I don't know how many people drove in, but it was a bit of a nightmare, so we're all happy to be here. I'm very lucky to give you a policy update today because on Monday we had Chris Lucas from the Senate Banking Committee speak to our membership, and yesterday we had Nathan and Annick from the Senate Agriculture Committee speak to our membership. So we got really good updates that I'm excited to share with you. It's been about 6 months now that I've been CEO of the Blockchain Association. It's been a pretty wild 6 months. I kind of joke that we've lived a few years in that 6 months, but it's been great to see what we've accomplished, and it's great to see what's ahead and what we can accomplish down the road. Probably the biggest thing or the biggest concern everyone had was that the government shutdown was really going to slow down the regulatory process, the legislative process, and kind of just push everything back. I actually think now that the government's open, the regulatory side, it probably did push things back a little bit. I had met with Chair Atkins a couple weeks ago. At the time, he was saying, there was a lot of things that he had hoped to accomplish by the end of November, December, that were just backed up because he didn't have staff. Now that his staff's back, I assume they're going to move quickly on a lot of these initiatives, one of them being kind of the parameters or more instructions around what the innovation exemption is going to look like, which will be, I think, really interesting and something that will be a big benefit to the industry. On the Hill, interestingly enough, sometimes when there's a shutdown, that allows staff to keep working. They have fewer meetings, fewer hearings, everything just kind of slows down. So it allows them to, stop and work on legislation, and that's really what we saw was a lot of work going on, even though the government was shut down. We saw the Democrats' proposal, which was was pretty far outside of the what was going to be acceptable, but they did spend some time putting that together. I know that after that, then it just kind of helped bring everyone back to the table to talk, and start working on this in a bipartisan manner. Where we are now. In the Senate Banking Committee, they're meeting daily with the Democrats and Republicans are meeting every day for hours, not an hour, not 30 minutes like you would normally do on the Hill, hours in a room together. That tells me they're really serious about this. You usually don't lock yourself in a room with the other party staff unless you really are going to get something done. So I do think they're making progress. I know that they're ticking off a lot of the subjects that are a little bit easier, that aren't as controversial. They're kind of getting those out of the way first, and then they're really going to dig into some of the more controversial issues. And one of them, it's going to be the DeFi provision. And so that's something we're going to watch really closely, how they try to go, deal with that. Title V is good the way it is. We really don't want to see changes. So we'll be working closely with the Banking Committee on that. On the agriculture side, you probably all saw their draft, which was pretty light on details. Everyone asked me, what did the bracketed language mean? And I said, it means one of two things. If everybody yells about it, it means we never intended to have that in our bill. If nobody says a word, it means we've always intended on having that in our bill. So it's kind of a trick that's used a lot on Capitol Hill when you are still negotiating language, but want to get something out for public feedback. And for Blockchain Association members, we're taking input, taking feedback, going to compile that and send it up to Capitol Hill. Actually, I think we're doing that today. So looking forward to getting that, what's most important to our members, getting that in front of the Senate Agriculture staff so they can hopefully make some changes around some of the issues where they're just, not necessarily the areas where there are no details, because we just need to see what's going to come out there. But there are some issues where there's just need to be some tweaks and some fixes. So we're hopeful that when we send up our feedback from the BA, that helps kind of guide those issues so that we can tackle what will be the bigger issues. Again, DeFi, they have a section on anti-money laundering, but no details, just bracketed. we've got a lot of questions around what that means and what they think would fit in there. I think a lot of people would argue there's no reason to do anything. The law is the law, and there's no reason to apply it differently to digital assets than any other asset class. So it'll be kind of interesting to see what they have in mind with that section. The administration, outside of the SEC, I know CFTC has their crypto sprint. We've been working on looking for some exemptive relief around perpetuals, hopefully allowing that market to be accessed by retail participants here in the U.S. So we're hoping to get that to CFTC and hopefully some movement on that, because that's a huge market. It's all offshore. It really should be within the U.S. I mean, if you think about it, you kind of want that within the borders, but also, if you're a regulator, you would think you'd want that within your regulatory remit too. So I think we'll probably see some activity around perpetuals coming out of the CFTC. Tokenized collaterals, another one that I think the CFTC is looking very closely at. That's an interesting issue because in theory, if you're a clearinghouse, a registered clearinghouse at the CFTC, you could on your own say, we're going to accept stablecoins as collateral, or we're going to accept digital assets as collateral. And then they would determine, if they're going to haircut it, what the haircutting would look like, what that asset means, or the value that it assigns to it. But I think a lot of the clearinghouses are a little bit nervous about being the first mover here, and so in the way I see it is they would really like CFTC guidance before doing anything on their own, even though they do have, the way the CEA is set up, they do have the ability to decide what collateral they want to take and how they want to haircut it to make it, to value it. So I think I expect to see some kind of guidance there from the CFTC on tokenized collateral. Working closely with the White House, they are very invested on market structure. They see this as, this another win for crypto under President Trump. I'm sure most of you know Patrick Witt. He's on the Hill all the time. Every time I talk to an office, they'll say, well, Patrick Witt was just in here meeting with me. So they're doing kind of the shoe leather lobbying work of trying to get market structure going and figuring out how to find bipartisan deals, where the White House can pull levers to help. And I think having the White House behind getting a bill done really does say to me that there is still some momentum. I know a lot of people have thought, well, this is dead. It's not going anywhere. It's too hard to get done. I don't disagree that it's too hard to get done, but I've seen some pretty amazing things come out of bipartisan discussions in the Senate, especially when you've got the two sides really committed to getting something done, and when you have the White House behind you. So I actually think that shows that there's a lot of momentum. I think you probably all saw Tim Scott's comments yesterday that they really are looking more beginning of next year. Again, not surprising. The shutdown, I don't think that really slowed them down. I just think it's that hard to get agreement on these issues that trying to push it through by the end of the year is just impossible. So I do think, they could turn to this early next year. They'll also have a government funding fight again at the same time, so there will be competing interests for sure. But I do feel like we could see bipartisan market structure on the floor of the Senate in early 2026. And the other thing I'll just mention, we've had kind of a campaign that we've been working on, pushing back on the banks, mostly around for them it's the yield issue. For us, it's the reward issue for stablecoins. We want to make sure that Genius isn't reopened. We think it's settled law. It's only been a couple months. Let's let this law go into effect. There's rulemakings and studies that need to happen. So this idea that we'd reopen Genius on market structure is not a good idea at all. And I think we just have to be vocal in the opposition on this. At the end of the day, the good news is I think we're on the side of consumers here. In my mind, this idea of you shouldn't be able to pay rewards, well, why shouldn't the consumers get rewards for holding stable coins? Why should we take that money out of the consumers' pockets? And I think that's a question that we need to be asking the banks and others who are looking at this. Why is the consumer not, why shouldn't we give that money to consumers versus say, well, we didn't really we didn't really mean this, so we're going to take this away and we're going to force everyone to maybe take a lower payment on when their money's being held somewhere, especially like in a bank savings account. So we're definitely going to keep pushing back on that as the rhetoric continues. I've talked to a lot of members on the Hill who are not interested in reopening Genius at all, which makes me feel like we probably will not be dealing with this on market structure, but I know there are some pretty vocal people in support of reopening it and making some changes, so it's something we're going to have to really watch going forward. And with that, I would love to take questions. Is that okay? How much time do we have here?
Let's take a couple questions if we have any. I think that's a great idea. We don't get you here that often. So I'm going to grab one of these mics. If anybody has a question, please raise your hand. Testing? Yes? Yeah? Considering it? No?
It's early.
Okay. Carl.
Morning, my name's Carl Schonander. So on the risk-reward, whatever you want to call it, issue, I'm presuming the banks remain opposed to allowing rewards. Is that the main fault line here, or are there others we should be aware of?
Now, that's the main fault line here, and the way the banks are framing it is that's just yield with another name, that this is getting around the no yield payments that was in Genius Act. I think there are some concerns from maybe the community banks that, with being able to kind of the state charter issue, that there could be like new competition at the state level as well. But that doesn't seem to be the overall issue. The overwhelming issue is really this idea that the rewards to them, they say it looks like yield. I think the biggest problem is that means if you want to hold consumers' money, you're going to have to start paying them more. Because if you can put your money in a stable coin and earn 3, 4, 5%, if you're choosing between that and a deposit account at a bank, which has less than 1% yield or rates, it makes no sense to go with the banks. And so at the end of the day, the banks will have to raise those interest rates in my mind. And so that's really where the fight is, because I don't think they want to have more money out of pocket to keep, depositors within the banking system.
Can I ask a follow-up? Thanks. Yeah, that was my understanding as well. What do you say to those who say, correct me if I've got this wrong, that stable coins aren't just a form of investment, but really are supposed to develop into a payment mechanism? And if that's the case, why do you need rewards / interest / yield, whatever you want to call it?
I think some of it is just a matter of, the way the stablecoins are structured, the reserves that are held are made, they are earning yields. And honestly, in my opinion, we should have allowed yields. We should have allowed consumers to have yields. Anytime you can get more money in the consumer's pockets, that's what we should be for. So I think at the end of the day, I guess the question is, who's losing out on the money here? And in my mind, regardless of what you classify a stablecoin as, if there is some stream of money that's coming in, however this money is being held, the consumers should have access to that. And with the rewards, I think that is a really, it's a good setup for the exchanges, gets people more interested in stable coins, gets them in this space. But at the end of the day, however you define a stable coin or whatever you think it's going to be, there's still going to be money held to back it up. There's still going to be interest accumulating on that money, and that really should, in some form, go back to consumers, in my mind.
Okay, I think we only have time for one more, and then we have to move on.
Thank you. Kyler Phillips, just a quick question. You mentioned that BA supports, the Title V DeFi provisions as they are. In your conversations with the Democratic offices that issued the leaked proposed changes, is this sort of like a hard line in the sand for them? Like, do they need changes to Title V before they support market structure? Or are they sort of willing to maybe see, concessions in other areas to support the bill?
I think they're still learning. I've spent a lot of time in these offices, especially after they put their proposal out, and a lot of it was just explaining what the problem was. For a number of the members, when they put their proposal out and they said this will not impact, people who are writing software or code, people creating code, they really thought that was a savings clause and that everybody would be happy with that. But when you started to get into details, it's like, well, you said if you deploy code, you have to register. Deploying code, if you write code, if you want it out there, you're gonna deploy it. And they were shocked that they didn't think of it that way. So I think a lot of it is more they are catching up on the kind of what DeFi is, and they're still looking at it as there's some kind of centralized organization controlling everything, and they can come in and flip a switch and change how things are traded or how money's held. And I think trying to help them understand that, again, we're talking about developers, we're talking about code, we're talking about protocols, we're not talking about centralized entities. I think that's helping them get to the right place. And their big thing is on kind of anti-money laundering. And again, explaining to them that there are on-ramps and off-ramps to DeFi. And those areas are, they go through AML KYC. So this concern that there's no AML KYC happening in DeFi is really a false narrative. And so helping them understand those sorts of kind of misconceptions, I think, has brought them closer to where Section 5 is. Now, whether or not they get all the way there, I don't know. I think they're being pretty quiet about where they are with those negotiations, but I think a lot of it's just a fundamental misunderstanding and the need to really be educated on what DeFi is and what it means to be a DeFi protocol. Yeah.
Summer, do you have time for just one more? Okay.
Just for Gerald.
One more. Hey, thanks for doing this, Summer. Good to see you. So I know you guys have also been focused more on the state level initiatives, and just on this sort of note, I was wondering, so there's, I think, like a confusing kind of announcement that came out of Nebraska where they had like the first crypto bank, right? And then, of course, that probably doesn't make like Anchorage folks seem super happy. I think the governor of Wyoming kind of clapped back a little bit, the governor of Nebraska. This was very interesting. I was just wondering if you could talk at all about how states are approaching stables and like this integration of banking and some of the new products that we're offering.
Yeah, a lot of the states we're going into, they're coming to us saying, we don't know anything about this. And so can you just come and educate us on what the Genius Act does, what it's about, what we should be thinking about on the state level. So that's kind of where we're going and weighing in is on with those states that are really just not sure what it all means. And honestly, with some of them that are maybe going in the wrong direction, I think there's also a little bit of that they don't understand what it means either. So right now, I think the way the states are looking at it is we need to understand this because this impacts, this impacts our banking industry, this impacts, the financial system within our state, so we need to better understand it. And it's great to see the states who are willing to raise their hand and say, come educate us, because we don't know what this means. So it's kind of more of less of a like the states are taking a specific direction, and more of we just need help understanding this so we know what direction to take.
Summer, do you want to mention the upcoming Blockchain Association Policy Summit?
Thank you. Yes, we have our annual policy summit coming up on December 8th and 9th. We've got a great lineup of speakers. Chairman Atkins will be there. Hester Peirce has confirmed. We've got a number of members of Congress who have confirmed. A lot of great panels planned. Hopefully we see all of our members there. If you're not a member and you're interested in becoming a member, the Policy Summit is a member benefit. It's only available to our members, so happy to talk about membership and how you get in the doors of the Policy Summit. But it's going to be a really good, the content this year is going to be really, really interesting with a lot of really great speakers. So I hope to see some of you there. And again, if you have any questions, actually Dan Spooler is in the back here. He's our head of membership. So if you have any questions about membership, corner Dan, and he can tell you all about the application process and about the member benefits that we have, like the Policy Summit. So, thank you for reminding me of that.
Yeah, thank you.